Hey folks, Vic here with your weekly trade video as we wind our way towards Christmas and the end of another year. Can you believe that? In his pre-market analysis video for Monday, which was also his monthly top down, which was excellent, Darko pointed out several trade possibilities, but I want to focus in on three of them in particular, which were very nice trade setups that looked good at the time he did his PMA, but were actually very dubious trades when the markets open for the new trading week. And I'm going to show you that taking all or even any of them was not a good idea, and you're going to hear why. This is trading, folks, and although we make things as objective as possible, there are situations where you need to use your noggin, okay? You got to use some common sense, which I'll explain that. And as you'll see, it's not difficult stuff, and I'm sure that this will make complete sense to you when you see it. Okay, I'm also going to cover a few other very useful tips regarding trading at certain times and certain conditions that I think will be very helpful. And just before we look at these trades, if you want Santa Claus to come this year, you need to hit the like button and follow us. Okay? Fair warning. All right, let's have a look at these trades. So this past Monday, December the 2nd, Darko pointed out a couple of very good setups in his pre-market analysis video. Ones that have produced great returns in the past. Same patterns, same everything. So does that mean that these setups are always going to be profitable? Of course not. Right? You never know what's going to happen. Always remember that. You never know what's going to happen, nor do we need to know. All we need is a proven edge. So in particular on this day, there were three trades. I just put these on a little PowerPoint so you can see them. There were three trades that I want to talk about. There was a buy on the Euro Kiwi, there was a sell on the Kiwi Yen, and a sell on the Kiwi Swiss. Okay, now what do all of these trades have in common? Well, each of them has a New Zealand dollar cross in them, don't they? And listen carefully to this. Just have a look at these and think about this a bit. Each one of those trade possibilities would only be profitable if the New Zealand dollar dropped. And remember what I just said? We never know what's going to happen. So what an astute trader will do is only take on one of these trades, not all three of them. Sure, they could all win, but that's the way that a gambler would trade, and we don't gamble. Okay, go to a casino if you want to do that. We take high odds setups that make sense, and we never over leverage or overexpose ourselves. Okay, we are totally aware of what our account will look like if the trade fails. Think about that, and we keep in mind at all times the concept of capital preservation. Okay, because there's just no room for heroes or gunslingers or whatever in the Forex trading game. Okay, so let's take a look at each of these trades, and I'll go over them here. This is the Euro. What is this one? The Euro Kiwi. Okay, the buy on this was at 171.15 with a stop of 41 pips. Well, first of all, before we talk about that, look at this level, the beautiful level. This is also a weekly level, pin bar reversal. This tells us, that the price is telling us that it's looking like it wants to go up here. Okay, so that's what we're looking for. That's what these advanced candle action trades, ACAT as we call them, what they tell us. We go down to our entry time frame, which is the hourly chart, and notice that the price gapped down. Okay, and we got filled very close to the opening. These black vertical lines are day markers. So here's the end of Friday, the opening. A couple of candles on Sunday, and it got filled very, very close to the opening of the markets on Sunday. When I say Sunday, I'm talking North American and European time. I know it's Monday in Asia and New Zealand, Australia, etc. Okay, so I want to talk about these market opens here shortly here. Just keep this in mind. Okay, there's a few things to be very, very aware of. Let's go to the New Zealand yen pair. Where is that? Right here. Again, here's the daily chart. We hit this. Let me just zoom this out a little bit. Look at this old level of support. Price trades below it, comes back up. We expect it to be resistance. Sure enough, price gives us an advanced candle action pin bar reversal right here. And we go down to our entry time frame, the hourly chart. And look, see this level right here? This is where we're looking to sell right here, okay? Because of this pin bar, this whole day in here. Whoops, that was a mistake. Click the wrong button here. There we go. Sorry about that. Just a second here. There we go. This whole day here was the pin bar reversal that we just saw on the daily chart. Okay, so again, look at what happened. Here's the close of Friday. Price gap way up here. Okay, and the New Zealand dollar went straight up as it did on that day, and price gaps way up, higher than our entry price. So you would be in immediately if you had your limit order in there, okay, or as soon as your dealing station would allow you to put the order in. Let's move over to the New Zealand Swiss pair. New Zealand Swiss. Again, here is, let me just zoom that out a little bit there. Support. Price trades below it, comes back up. We expected it could be resistance. Sure enough, we have this beautiful pin bar reversal here. Another ACAT trade. And we go down to our entry time frame. Okay. And what did it do? It gapped up way above our entry price, like way above it, up into here. We were looking to sell it at this level right in here. Okay. And so it just kept going up. So there's another, the entry on this was actually at 64.21, I believe was our price. Gapped up right through it, kept motoring straight up. Now, there are a few things that were outright dangerous about taking any of these trades, let alone all three of them. But even though I've marked them down, like I keep track of these trades, I marked them all down as losing trades, just for the record. Even though just listen to what I have to tell you about these trades. First of all, something that I have talked about many, many times over the years is the idea of never being overexposed to any particular currency. Okay, in this case, every trade had a New Zealand dollar in it, and every single trade needed the New Zealand dollar to drop. And the Kiwi didn't drop; it rallied. So every trade was a loser. Secondly, all of these trades were entered right near the opening of the markets for the week. Is that an ideal thing to do? No, generally no. Why? Well, first, there's a few reasons for that. First of all, it's a new week, and we have no idea how weekend information is going to be digested by the markets. That's why we see these gaps. See this big gap up here? Something happened. Something got into the market. It gaps. It is far better to wait and give it some time. Okay. What else? Well, how about the spreads? What do you think the spreads would be like when it opened up like this? The spreads usually widen, sometimes a lot, when the market first opens. Okay. Again, not a time to be trading. And I'll tell you something. One more thing. This is just in my experience. Sundays/Mondays are not the best day of the week to be trading. I know sometimes there's a great move on a Monday, no question about that. I'm talking about probabilities and generalities. Most times, Mondays aren't the greatest. Okay, I don't have any stats or anything. I'm just, imparting my experience. Okay, so I hope those tips and comments are helpful. So you can see that analyzing losses is extremely beneficial, and you should never shy away from doing that. Okay, because by observing the things I just talked about, you can stay away from, like sketchy trade situations. And by the way, you should analyze wins as well, and make sure that the trade that you took, that you won on, was legit according to your game plan and your rules, and that you didn't just, fluke out a win. Because getting rewarded for doing something wrong can be very destructive to your trading. Anyway, thanks for listening in today, folks. Really appreciate it. And a huge thank you to all of our new members. Great to have you with us. We're looking forward to helping every single one of you. If you're not a current member, you can still join us. We'd love to have you with us. There's a link somewhere near the bottom of the text below this video or in the email that you received. And if you liked this video, like I said at the beginning, Santa Claus is watching. So, please hit the like button, give it a thumbs up, and follow us and click that little bell so that you'll get notified whenever I post a new video. All right? And by the way, leave a comment. I'd love to hear from you. Do you trade the open of the markets when the markets open at the beginning of the week? Let us know if you have any particular rules that you use for trading at that time. All right? Thanks so much, everyone. Wishing you all a great weekend. Take care.